Canada, once seen as one of the most stable and prosperous countries in the world, now finds itself facing tough questions. Is the country falling, and should people think about leaving before it's too late? In 2025, Canada is at a political and economic crossroads. Rising global tariffs, especially from the United States, have hammered Canadian exports, particularly metals like steel and aluminium, while energy remains the backbone. The Bank of Canada admits growth has slowed barely to 1%, with business investment weakening as companies wait to see if tariffs escalate or ease. And that uncertainty alone is costing a lot of jobs and confidence. At the same time, everyday Canadians are feeling the squeeze.
It's hard for young people to find a job these days, so I'm really hoping I can find one.
The official inflation rate may sit near 2%, but at the checkout counters, it feels far worse. Food prices remain stubbornly high, rent is pushing past affordability, and wages have not kept up. Families are cutting back, students are stressed, and many are questioning whether they can really build a future here. Housing, one of the Canada's biggest pressure points, has also shifted. After years of skyrocketing prices, the market is finally cooling. Nationally, prices are down around 3% year over year, with Ontario and British Columbia seeing the sharpest declines. It's not a crash, but a slow deflation. For new buyers, it's a small window of hope, but for investors and heavily mortgaged households, it feels like a ticking time bomb. With exports dropping and investments slowing, industries like manufacturing and construction are cutting back now, and fear projects mean fear opportunities. Immigration caps in 2025 slowed population growth to its lowest point since the pandemic, which means very less new workers but less consumers' demand, leaving the balance fragile. Young graduates in particular are finding stable work harder to secure. On top of that, crime is becoming a rising concern. The latest national statistics show uneven increase across the country, with big cities like Toronto and Vancouver reporting more property crimes and violent incidents. Canada is still far safer than many countries, but the perception of security is now shifting, and that matters when people think about staying or leaving. Internationally, Canada still is known for its energy, agriculture, and role as a reliable trading partner for oil, natural gas, wheat, canola, even its filming and gaming industries. But global competition and tariffs are chipping away at this advantage. The future really depends on which scenarios play out. If trade tensions cool down, Canada could bounce back by 2026, powered by the new LNG projects and energy exports. If tariffs escalate, the economy could slip into recession, jobs may vanish, and business could start moving elsewhere. Housing may get cheaper, but at the cost of homeowners' wealth. The cost of living is unlikely to ease unless wages rise, and politically, whoever leads next faces a public growing tired of promises without delivery. So should you leave Canada? The truth is, Canada isn't collapsing, but it is struggling. Rising costs, slower growth, and political uncertainty are making life harder. If your career is tied to trade-exposed industries like manufacturing or metals, the squeeze will be real. But if you work in energy, agriculture, or technology, the long-term outlook remains stronger. Canada is not falling, it is recalibrating. The real question is, can you wait out the storm or will you look for opportunity elsewhere? In the end, choice is yours.